Fear is one of the biggest threats to smart investing. When markets get shaky, emotions take over, and that's when costly mistakes happen. So today, once again, I'm joined by Mike Clarke, co-founder of Protection Point Advisors, and we're going to break down how fear influences financial decisions and what you can do to stay focused in uncertain times and stick to your financial plan. But before we get going, hit that like and subscribe button. We are here every Tuesday morning with professional insights for you to help get clarity on your financial plan and move forward with your financial life. So, with all that out of the way, let's get started. Morning, Mike.
Hey there. That was a great introduction, by the way.
Thank you.
That was good.
Thank you. Appreciate that.
I hope I can live up to that.
Of course you can. Okay. So, as the intro said, Mike, emotions really play into market uncertainties. So, in your opinion, how do emotions, particularly fear, impact financial decision making?
Well, I mean, fear is a very powerful motivator. So that likely, well, I mean, fear is going to induce selling when your fear gets to the point where you just can't take it anymore. Okay. So oftentimes it could mean investors sell off big parts of their portfolio because they're scared of losing. I think everybody kind of envisions themselves like the string quartet on the Titanic. You know, it's going down and I want to get into a lifeboat before it goes down completely and takes me with it. But that's not really the case. That's not reality. I mean, that's just kind of it's your fear taking over. So fear tends to induce irrational selling. Sometimes it induces irrational trading in the pursuit of opportunity. But I think more often than not, it induces irrational selling. And then irrational selling more often than not does undue and unnecessary damage to portfolios and investors.
So, Mike, throughout history, markets go up and markets go down. And if you listen to the headlines for as long as I can remember, the market will always continue to grow. So why do people tend to panic during market downturns? And then how does that really affect their long-term financial outcomes?
Well, let's start with what's going, with the world we live in today. We have a media that's in the drama business,
Okay.
and by the way, I'm not picking on the media here. And the media it is a business, and like any business, they want to attract and keep whatever audience they have, and the easiest way to do that is to feed them more of what they came for.
Right.
So every news agency, every media outlet, every social media, this or that, wherever you look, this is basically what's going on. And now we have algorithms on your smartphones that feed you more of what you've already consumed previously and all that. So it's more than ever, it's super easy to live inside this sort of ideological and largely fear-based bubble. And I think that contributes to investors making decisions about their portfolio sometimes. It's totally irrational most of the time, but that's what happens. Over the long term, however, you really do have to zoom out and take a look at the long term. Like, what are you trying to accomplish? I think it's every time you find yourself fearful, take a step back if you can, or consult with your advisor. And just talk about, once again, what do you want to accomplish? And then reference a little bit of history, like, how is what's happening now? How can I view this in context, and especially in the context of history, meaning has it happened before?
Yep.
And what happened when it happened before? I mean, and these kinds of market disruptions happen from time to time, and they're not at all unprecedented. And if you look at the history of what happens before, during, and after, it should provide a measure of perspective.
So you do a lot with risk analysis before even taking on clients, Mike. How does fear influence that risk tolerance? And then how do investors try to adjust that mindset, right? That fear-based mindset to avoid making some of these impulsive choices?
Well, I think the antidote to fear is always literacy. But I think it's twofold. At some point, you're just going to have your limits. I mean, there are people who are afraid of flying, and there's no rational reason for that. They're just afraid of flying, and you're not going to talk them out of it. I can't go to somebody who's afraid of flying and say, well, statistically, you have a greater chance of dying in your bathtub than you do on an airplane. It doesn't matter to them. They're not going to
Right.
fly. Okay. So at some point, you just have fears and they're just there. But also, if you are somewhat uninitiated to the way markets behave, it is becoming more literate in what to expect, and also becoming somewhat used to market behavior, because now you are an investor, and or maybe you've realigned your portfolio, done something, or gone a little bit further out regarding risk or whatever. Once you're sort of on the journey, is my point, you get used to the journey a little bit, and maybe that assuages a little bit of the fear. But I think it's a combination. It's literacy, and then also recognizing that at some point you just have certain fears you're just not going to get over.
Because outside of this, and we'll get into more of the market fears in a second here, but outside of the current market conditions, people's risk tolerance changes throughout their life,
Yeah,
correct?
sure.
Okay.
Yeah.
Just want to be clear. It's not just market downturns that change somebody's risk tolerance. I mean, it could be
Well,
having a baby, or buying a new house, or getting a new job.
yeah. Well, there's the emotional considerations that change over time, and the amount of risk you should take in your investment approach has a lot to do with where you are in the life cycle.
Right.
I've met 65-year-olds who are, damn the torpedoes, full speed ahead when it comes to risk. And then we have clients who are in their early 20s who are like, I don't want to take any risk at all. Okay.
Yep.
So with the client that's in the early 20s, all you can do is say, well, look, you've got a long, long time before you're ever going to need this money. So it's in your best interest that we elevate the level of risk here. However, I'm just going to acquaint you with that being likely the I want to say optimal, is I don't know, for lack of a better word, optimal approach. And then I try to get them to sort of wade into the pool, I guess, over time. And then the 65-year-old that's, full speed ahead, I'm going to say, well, yeah, it's great that the market oscillations don't bother you, but we might want to ratchet this back a little bit anyway. Okay.
Right.
So it's a combination of, it really means having discussions and talking about what tends to be the more reliable methodologies played out over a long period of time.
So what are some of the biggest fears you're hearing from clients about the current market? And I know that's a big
Currently,
question, Mike.
well, obviously they are trade policy has taken, it's been center stage over the last couple of weeks. And in the center of that, I want to say there's kind of like this cult of personality thing that is very polarizing, that people have really, really strong feelings about. So there are people who have really strong feelings negatively, and people who have really strong feelings positively. There are people who think, the entire mechanism is going to come down. And then there are people who think, yeah, well, you should have thrown a Molotov cocktail into it a long time ago. There's all these emotions around, and all that really does is just kind of heightens the drama a little bit.
Right.
It is also important to point out, however, that this market going into this year was wildly overvalued, almost at 1990s levels. Okay. So the analogy I would use is, if you take somebody who had, let's say you imagine somebody who's, say, 100 pounds overweight, they smoke 2 packs a day and eat pizza for breakfast, lunch, and dinner. Then they decide to go on a bike ride, have a heart attack. It wasn't the bike ride that caused the heart attack. Okay. All right.
Okay. So,
So
Mike,
I would use that. Yeah.
So you've mentioned the media. I love that analogy. How much of the fear in today's market is driven by the fundamentals, right? Because you mentioned it
Yeah.
was overpriced, and a lot of people don't understand the fundamentals of the market or a company. So how much of the fear is driven by the fundamentals versus this media narrative?
Okay, so when it comes to everyday investors, what we call retail investors, people investing in their 401ks, IRAs, what have you, there's a lot of irrational fear out there, and that's largely media driven and how people consume information and all that stuff. However, when it comes to the way trades occur on Wall Street, that's more about fundamental economic data You know, the unemployment metrics, the retail sales metrics, GDP growth, forecasts of GDP growth, all these kinds of fundamental metrics that the market pays attention to. And most importantly, monetary policy. How's the Fed going to interpret all this economic data, and what's it going to do with interest rates once it gets through doing that? Okay. So that's generally how the market sort of trades. So the market is very, oddly enough, emotionless when it makes trading decisions, although that is influenced, though, in large part by the way regular, human beings are feeling. So one kind of influences the other.
So you have these institutional investors, you have the retail investors, and the institutionals follow a set of rules to mitigate that risk.
Mhm.
For the retail investor, what strategies can they use to stay calm and rational during times like this?
Well, uh, I, I think, first of all, I'm not going to try to talk somebody out of their emotions.
Right.
I can't do that. So I think rather than say stay calm, I'm going to substitute, well, just try to manage your emotions the best you can. Okay. If you have an advisor, talk a lot with your advisor, because they're the ones that are supposed to be talking you down from the ledge anyway. Um, and then from there, if you have an outcome that you're pretty clear you want to achieve, like say retirement, then it really does become a process driven, sort of rules based endeavor. Like you try to pull as much of your own emotion out of the process as you can, and just stick with whatever process you've adopted. Again, if you work with an advisor, they should have already adopted a process that's fit for you and what you want to accomplish. Just stay with the process. Now is not the time to make wholesale changes.
So then maybe emotions weren't quite the phrase. Like maybe a better question is like, how do the retail investors shift that mindset and start making decisions based on real data versus the emotion side? Because obviously, you can't take away emotions, but how do they shift the mindset to making more data driven decisions?
Well, I think it starts with good information. It starts with good information that would hopefully induce perspective. Again, if you're working with an advisor, that's their job to help you do that. If you're not working with an advisor, don't believe everything you read.
Right.
Um, Maybe instead of getting your news about the markets from a major news outlet, maybe get it from oh, a source that is oriented more towards finance specifically. And some of all the major investment firms, by the way, have commentary that's you can read. Schwab has it, Fidelity has it. They all have it. So you maybe take a break from the news media and read things that are produced by major investment firms. I would say just anything you can do to grab a hold of perspective is the thing to do.
And how do you personally approach your clients with these conversations and them feeling overwhelmed by the market uncertainty?
Well, I'm not. I don't. I've been in this. Yeah, I've been doing this a long time, and so I've seen this movie before.
Multiple times.
Yeah, lots of times. Um, and as my profession dictates, I am studying a lot of this all the time because I have to. And the way I talk to clients about it is in pretty much the same way we've discussed it here this morning. It's really all about introducing as much perspective as I can, referencing history, saying, this has happened before. And by the way, there are people now who are saying, yeah, but nothing like this has ever happened before.
Hmm.
I think you could say that that was true only in the context of every single occurrence that has happened over the last 100 years. And there have been many, many, many of them. They are unique unto themselves. You could effectively say in 1918, the Spanish flu had never happened before in the way it happened then. That was true. You could say the financial crisis in 2008 had never happened before the way it had happened then. That was true. So these events are unique unto themselves, but it doesn't mean that the market isn't going to historically behave the way it's behaved in the face of these occurrences. That's also very likely to be true.
Right. And I shook my head when you said that, Mike, because it drives me nuts. Like it's never happened. You're right. It's never happened. We've never had AI. We've never had
Right,
cryptocurrency. We've
exactly
never
right.
had, I mean, like
Times
all
will
of these.
change. Yeah,
Yeah. And it's not just within this market. Like there are markets overseas that have never been in this environment.
right.
Every day is a new day,
Mhm.
which also goes to the other, well, we need to get get the markets back to where they were. They will never be where they were.
Right.
But
It's like locking your 3-year-old in the closet because you don't want them to grow up. Open the closet in 5 years, they'll be a different person.
they'll be a
I
different
mean,
person.
and of course you'll be, taken away, and the kid will be taken away because
Yeah.
anyway, but
Yeah. And
maybe
but I mean,
no,
but that's the thing. Both parties, the child and the parent,
yeah.
will not be the same tomorrow.
Right. You can't, there's no system, and there's no organic system that you can reference that you can just sort of preserve.
Right.
It's going to change.
Everything.
So everything changes. So if one is saying this has never happened before, yeah, you're right. But we've the system has changed. I mean, that's just sort of the nature of it. Okay.
Yeah.
But what we do know is markets and economies are resilient, historically speaking, but they do shift and they do change. So navigating those shifts and those changes, um, it really is the key. And again, looking at history, history gives us a lot of clues about what to do.
Right. So, Mike, if you could give investors a piece of advice about handling fear in today's market, and you've spoke about a lot of them, what would that be?
Well, I use an example. So I was meeting with a client in early, what was it, late March of 2020. Now, what was happening then.
Mhm.
Okay. And their portfolio was down 31% because how do you talk to a client and you're down 31%?
Yeah, it's tough.
But I showed him their financial plan. I said, look, let's zoom out and look at this over the long term, because I just kind of want to show you how this plays out. Okay. And oddly enough, their financial plan was unchanged. And
Hmm.
the reason it was unchanged is because if you're doing retirement income projections properly, you're allowing for markets that sometimes behave in the extreme. You have to take that into consideration when formulating the projection. I had done that, therefore his projection remained unchanged. And he kind of went, yeah, I know this is an isolated occurrence. I'm in it for the long haul, so I'm not really worried about it. And thanks for showing me that. Okay. So if if you find yourself being overly fearful about current events, if you think that there are certain people who are going to throw a monkey wrench into the whole thing, if you don't feel that way, if you feel like we want to blow it up anyway, regardless of how you feel, zoom out and ask yourself what you're trying to accomplish ultimately with your investments, and then revisit the probabilities that you can accomplish those. I think it really is a time for perspective. If you work with an advisor, stay connected to your advisors. If you find yourself fearful, talk to people, disseminate information reasonably and optimally if you can. And you know what? This too shall pass.
Right. And how do you see the market evolving? And this is also a big question, but how do you see the market evolving over the next 6 to 12 months?
That's a good question. I don't think we're out from under the trade policy uncertainty. I think we'll know more on April 2nd. Look, I don't know that, uh, again, I'll just say, I don't know. I want to be careful here. There's a lot of strong arming going on. Okay.
Right.
And there are and the neighbors are yelling at each other over the fence. Okay.
Right.
Um, and so I don't think that's entirely finished yet. But I do think on the other side of it, I think there is still reason to have some optimism. The economy is still relatively strong, I think. At least the economic metrics indicate that. Companies are still relatively healthy. You don't see a lot of what we would call systemic weakness in this market. And with companies, earnings are still probably going to be relatively strong. So, we've been forecasting that, a correction probably would happen during the first half of the year. Corrections are, by the way, they're normal and somewhat necessary because it's like pruning a tree. Um, and of course, the other thing is, what happens if we get into a recession? A recession really isn't this economic calamity that so many people would have you
Right.
believe it is. It's just part of the economic cycle. Um, I do think that, in the longer term, you have to look at this market amongst the backdrop of, things like, unemployment, consumer spending, things like that. So I think if those metrics hold, I think we've got a market that probably will be nice to us at the end of the day. I would say if we were to end this year modestly positive, I would call that a victory. Um, but then again, we're still not out of the woods yet. And I would say if we do experience a bear market, it's because there was some systemic weakness that nobody saw. I would say that. Okay.
But Mike, so to put things like, to kind of just take a step back and look at it on a larger picture here. And I don't want to get necessarily too deep in the weeds on this one,
Yeah.
but you mentioned, eating pizza and smoking every day and all of a sudden going for a bike ride and having a heart attack.
Yeah.
Some of the policies that were enacted back in 2012 and 11 and through all the administrations from there, could those be having a ripple effect today?
Well, that's always going to be the case. The policies that were enacted years ago often manifest themselves years later. And again, I'm not trying to be an economist, so it's a bit above my pay grade to
Right.
address that thoughtfully. But I think that's always the case. You can always look backward and say, well, we shoulda, coulda, woulda.
Yeah.
So the only thing the markets really can do, that their investors really can do, is just look forward. That's why it's so important to always keep your eye on the ball and, be mindful of whatever your big picture outcome is. Policy, I will say this, I don't think anybody, by and large, I don't think policymakers purposefully try to make bad policy. Okay.
Correct. I mean, yeah, and this is the thing. I mean, this is like our financial plan, right, Mike? Is
Yeah.
that all we have is the information of today. That's
Yeah.
it. So you make the best decision today.
Right. And again, we live in a world where, again, the media's in the drama business.
Right.
Politicians engage in theater a lot because
Yep.
politics these days is theater. Um, and you have to separate all that out and go, okay, well, what is really going on? It's unfortunately, it's more difficult than ever to do, by the way. And you probably have to work at it a little, maybe harder than you have in some time to try to get to the truth of things. But I think most people understand that this is the case, and it's up to professionals to help our clients, again, disseminate all that stuff and get to, it's really about perspective, because you can always look at what didn't work. You can always look at what did. You can always look at who did what that worked and who did what that didn't and all that stuff. And a lot of that often is just kind of useless.
Right.
You have to just get to take your emotions out of it as much as you can. Look at where you want to go and the likelihood that you're going to get there.
So then, Mike, with that, like books, resources, you mentioned a couple, like all the major institutions have market commentary.
Yeah.
But resources or practices that you would recommend to help people develop a more, let's say, resilient financial mindset.
Well, again, I would just look at, again, the major investment firms have commentary. I mean, I think there's some of the, more generic sources like some of the financial websites you see on the web they're okay. And you can generally read an opinion here, an opinion there, or a news piece here or there and kind of get a perspective on what's going on. I won't name any of them, but they're easy to find. The stuff from the investment firms tends to be a little bit wonkier. If you, for example, read commentary from Schwab, it's pretty detailed and it's generally meant for people like me, not necessarily for the larger public. But BlackRock does a pretty good job. That's another one. Vanguard does a good job. The information's out there. So, I suppose, find what you feel you can understand, and maybe find 2 or 3 sources that you feel like you can understand, and then regularly disseminate what they're saying. It tends to be consistent with what people like me say.
Right. Mike, this has been great. I know that it's a deeper conversation, and look, I understand that fear is always going to be a part of it, of somebody's investment journey. And I hope for those that are watching, the key is to stay disciplined, focus on the bigger picture, and not letting short-term emotions derail your long-term success. So, if you have any questions, please connect. Leave your comments below. We'll get to them. Mike, as always, thanks for sharing your insights. And to the viewers, if you found this valuable, please make sure to like and subscribe. Mike, thank you. Appreciate the time.
Appreciate it.